The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 16th terrific Tuesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of these markets. What the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon on this terrific Tuesday. Of course, I'm absolutely grateful for your presence here, but more so, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648, internationally 727-445-1044, because this is terrific Tuesday. Of course, it's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Let's get things kicked off here right now. We got the Dow trading up 207 points at 16,180. S&P trading up 29 points at 1894. NASDAQ Composite up 89 points at 4427. Russell 2000 up 22 buckaroonies. That's trading at 993. Russell 2000 percentage-wise, if we take a look at those four indices, is in the lead out here. It's up a little over 2.25%. Right now, the NASDAQ Composite not doing too bad. It's up 2%. But how about that semiconductor sector? Right now, up 3.5%. That's up $20. You've got the transports. They're up 2.25%. They're up 161. So you've got things moving. So what is it that we're going to be paying attention to? Where is it that price is headed to? Hey, we didn't even talk about Goldilocks out here, off $29. Not yet to what I'll call the bear market line, but not that very far away. I think Mark Cuban, just if he really did buy those out-of-the-money calls, I hope that they're out of the money for maybe like 2000, we're in 2016, maybe 2017 or so, because Goldilocks is going to, well, it's that story of the three little bears. And at this stage here, gold is going to be headed lower, much, much, much lower. That's the case with silver as well. 45 cents trading out at $15.33. Light sweet crude up 38 cents right now. That's trading out at $29.06. Priceline is a leader to the upside of $40. AutoZone up 34. NetEase up $13. That's up 10%. Regeneron Pharmaceuticals up 3%, up $12. To the downside here, other than an ETF, well, Rand Gold. Let's start there. Rand Gold Resources, GOLD, is the ticker symbol, off $5. One of the stronger equities out there. Just gave you about as if. So here's kind of the thesis, right? When I was taking a look, when my subscribers and I were taking a look at gold and making a bottom, we had a certain signal. We had two signals that we were looking at. Two signals. I don't need to share those with you right now. I keep that for subscribers out there. But we had two signals that we were looking for. And then we were also paying attention to what was going on inside the equities. It was the mining equities that actually gave us the nice bottoming signal. This is back on January 20th, 21st out there. That gave us the signal to go ahead and come in on the long side of the trade. Now, I wish that I had kept it through last Friday. That would have just wrung out every potential profit that there was in it. We took our profits just a tad earlier, but we are not complaining about 92% or so in profits on that trade out there. Now, if we take a look at Randgold, so if it is the equities or the strong equities that are giving us a signal out here, well, you got a doozy. You got a doozy when we take a look at Randgold. What do we have out here today thus far? You know, it all depends on how this equity closes. But if we're to close right now, what this is confirming for you at its most recent high is a island top. Now, the beauty here for both the bulls and the bears is if, in fact, this pattern confirms today, there would be nothing more bullish than the island top pattern failing. In order to do that, in the case of Rand Gold Resources, it will need to close above $90.28 out there. If we take a look at, and I'll go back to last Thursday, and that's the session that we're looking at. We had a gap up between Wednesday and Thursday, and you love these island tops and bottoms most when it comes to equities. Equities versus the ETFs out there, and especially ETFs that are correlating to some type of futures contract. But when it comes to the equities, great signals out here. So on the trading session of February 11th, the low out there is $86.23. A little bit higher low on Friday, but today's high, and this is where we have the island, today's high is 86.19. 86.19 is 4 pennies below 86.23. By just looking at this chart, you might miss it. But this is something you do not want to miss out here, because if in fact this island top holds today, I do believe that this just simply this just adds to my thesis that what was taking place last week was a blow off top inside of gold. Nice big blow off top. Now, if we go back, let's just turn off profiles out here because we don't need those on the screen when we take a look at these island patterns out here. The last time that Rand Gold Resources made an island top, let's just do it like this, was really between the trading sessions of, so the beginning of that island top was on May 13th. The end of the island top was on May 18th. It was really the sessions of May 12th and May 19th that gave you that pattern. So if that pattern worked, why is it that you would think that this pattern would not work? Actually, there's no reason to believe that it wouldn't work. And you'd play it the same way. If you take out the top of that island, then it says that this equity goes much, much higher. But right now, you've got one of the strong dogs out here, strong dogs volume-wise and so forth, that has given you a nice topping signal. So where does price pull back to? Oh, that's a great question. I would have to say the breakout area would be the first place you would look at, and that would be the high of February the 5th out here. That's at 78.37. You're at 84.70. Is that where it has to stop? Absolutely not, because this has several gaps along the way. In fact, this probably qualifies. Our man David White is probably on this right now. We probably had a 3-gap play. And then today you're getting your island top. That first, so that says what? Because if I take a look at it, certainly dollar-wise, you've got the biggest gap between the sessions of February 5th and February 8th out here. Percentage-wise, I'm not so sure, but dollar-wise it is. It's bigger than gap number 1, gap number 2. Typically, these patterns pull all the way back to gap number 1. Make sure you have stops in place, folks. Doesn't matter to me which side of the trade you're on at any point in time. Just make sure that you have proper money management tools in place out here. But this says Rand Gold very likely pulls back into the $66 range. It's at 84.70 as we speak right now. Now, there was an island bottom that formed out here. There was a beauty. Here's an island bottom. No, that didn't qualify. But here's one. Here's an island bottom way back in January 9th, 2014 out here. That's one heck of a nice move to the upside. So we want to pay attention to these islands out here. I'm Steve Rhodes with TFNN. It says Goldilocks is going to be headed much, much lower. Mark Cuban, you should listen to TFNN. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go ahead and stick with gold here. A couple questions coming in by email, a couple pings inside the den. Let's just take a look at the current gold contract. We're going to look at the current gold contract. We'll go ahead and take a look at the continuous contract as well. So here's what we know about gold thus far. Hasn't completely failed just yet. My opinion is if it gets below 11.99, that's really the message. That'll be like Paul Revere riding through the streets, just saying, the bears are coming. The bears are coming. And until that happens, I'd be more neutral. But today, I would say the Randgold Resources has given a huge signal out here. But of course, we need to see how the day ends. Now, if we take a look at what gold has done on its current daily contract, no question that it broke above its most recent swing point high, which was from October 15th. And that would become a natural area of support. We can see that in fact was tested, that 1191.90 area. That is where most would say, hey, unless gold gets below that level, things still remain bullish. So let's not split hairs with regard to $8 out here. 11.99 to 11.91. I'll go ahead and give the bulls the benefit of the doubt there. But here's what we also know. You get below 11.91, what is that message? That message is false breakout. False breakout of a consolidation type of a move, or at least a breakout. That would, set up your normal retracement levels as places to take a look at where gold would pull back to. Some would say there's no problem with gold just simply pulling back to 11.29. Well, the only problem would be is if you're in a long position, and when you got in on that long position, if you got in that long position on Friday, you're not going to want to feel that kind of pain getting down to 11.29 or 10.93. Those would really be kind of your normal areas. But if we go take a look at the continuous contract out here, now this, what I'm sharing with you, none of these are the messages that have me believing that what the metals want to do is move lower out here. If I threw that out on here, that would be like throwing kerosene on your fire, and I don't want to do that. I don't necessarily need to do that. But let's go take a look at gold. Let's take a look at the long-term trend lines or channel lines out here. Here are both. Now, we can see here, this is a weekly chart, by the way, that we're taking a look at. We know that gold broke above its trend line back in the week of February 1st, a couple weeks ago. And when you break through one trend, you typically go up to the next level of resistance, in this case here, trend line. We'll call it the channel line because, in essence, that's really what it is. And that is the red line going across my screen out here. And that says, price really stopped right at that top of that channel line on last week. And since then, we've pulled back lower. So where's the first place that you come back to? Well, the first place that gold should then come back to is to come back and retest that trend line that it broke. Now, just depending on which week that occurs would go ahead and give us a price range out here. But that price range around 1129-ish is what we'll call it. Again, depending on how far out. And if gold comes down and tests that level and holds, and maybe it turns bearish. There's some other things that I would have to take a look at out here. But at this stage here, that would be the target. So what gold hasn't done is really broken a long-term downtrend channel line out here. It reared its head right up against it and smack right back down to the other side out here. So that's my take on metals. And, I was looking for some other type of signal, and today really got it inside of Rand Gold. Didn't see a whole lot of didn't see any others that I checked, and it was a handful of the mining equities out there that had island tops. But the one in Rand Gold, is strong enough for me. Now, if we take a look at the markets, the general markets out here, I'll show you what the ES Mini is doing. We'll take a look at daily charts, and we'll take a look at short-term charts. Now, the reason that we're taking a look at the S&P futures contract is because last night, or early this morning, I should say, it wasn't until 2 a.m., it was really at 4 a.m., was when we got a confirmation of that seventh inning stretch, that seventh wave move to the upside, which was captured with a nice little bearish engulfing candle out here. That said that price was going to pull back into the 1881 level. It actually pulled back below that. Now, what that tells me is that the high at 2 o'clock this morning, which is 1892.75, so 1893 in the ES Mini is what you want to write down on a pad of paper out there. You get above that, this whole pattern recycles, and then the ES Mini continues to move higher. Now, the reason why that is important is if we go take a look at, let me see if I have it here. Yeah, I've got it on this chart right here. If we take a look at this chart, this is telling me that the ES Mini is already broken out. Now, what I'm taking a look at here, is a trend line. And that is a trend line off of the high from December 30th. This is the daily chart that you and I are looking at. Now, in this case here, I'm just looking at trend line. So the high of December 30th, we go ahead and we use the high of this evening star pattern out here, and that's the high from February 1st. And what that happens to do is that happens to tag that nice little doji candle on February 4th. It also grabs the high of February 5th. I feel very comfortable that that is a great trend line. And what we can see, what you and I can see right now, the day's not over, but we can see on a daily basis that the message of the ES Mini is it has broken its downtrend. If it closes above this, it is just simply another signal that prices want to go higher out here. Do they have to go higher? No. They don't have to do anything that they want to. But this would certainly be its message that the current trend that we're in, that trend has been broken. That's the message with the ES Mini. So let's put 1893 as the final icing on the cake inside these. Doesn't have to happen between now and 4 or between now and 5:15. It could easily happen, 6 o'clock and on this evening. But 1893 is a number that you want to go ahead and put on your pad of paper. Now, at the same time that the ES Mini on a daily chart is up and over a trend line, the NQ a little bit of a laggard with regard to its trend line, not a laggard with regard to its movement today. And here we're just using that same swing point high from December the 30th out here, and then we're using the touch points. We're using the swing points from February 1st out here, and we can see that price here is not yet made it back to that trend line. And all the ducks need to get in a row here. But is there anything that you and I can take from the 2-hour chart for the NQ? And I believe that there is, but let's just simply go back and check. I do believe that the NQ also, and it also made that seventh inning stretch candle at 2 o'clock this morning, confirmed at 4 o'clock. So the number to be watching inside the NQ, we gave you the number on the ES. The number inside the NQ is going to be 4102. 0.50. You get above that, that says that this whole thing recycles. Probably on the daily chart, you get right up above that trend line out here. But I'll go ahead and make the prediction that that's going to give us a signal that this market wants higher price. And folks, this could be substantially higher than any of us anticipate. However, the fly in the financial ointment, the new pattern that is out there, the new tool that you and I have to look at is we need to go take a look at that Jed Clampett pattern that is inside of the market. That's right, the Jed Clampett pattern from the Beverly Hillbillies. So when we get back from this break, let's you and I go take a look at the Jed Clampett pattern, and we'll go see where light sweet crude Texas tea is headed to. Because you talk about a Texas two-step, wait till you see this one. Steve Rhodes with TFNN. We've got the Dow up 211 points, S&P's up 29 points. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Before we go to light sweet crude, a couple questions during that break. Someone said, hey, I mentioned the Russell 2000, the semiconductor index percentage-wise leading the charge to the upside. Of course, we know that we know that the Russell 2000 certainly has been beaten down. And if we take a look at its message, now this is a 10-minute delay that is on this chart, but it's really not that far off. We can see that same descending trend line coming off of the December 30th level, that becomes the high is our first touch point, and then we use February 1st out here, and then really that also hits the high of February 5th. We can see that price this morning, well, I shouldn't say this morning, Sunday night, gapping up above that trend line, staying above that trend line, basically towards the session highs out here. So that trend line has been broken, and it's not really that short of a trend line. It goes back to December 30th, right? You've got that trend line. You've got the trend line here inside of the Dow futures contract. Price is traded above that. So that's looking pretty bullish. It's just a matter of the NQ. You and I have the numbers to pay attention to. We'll focus on that 2-hour chart here where we'll get its message. I think all the ducks, as they say, need to be in a row. Now, speaking of ducks in a row out here, now, you know that I have shared with you for many, many times I've shared with you the lack of the correlation between the direction in the price of light sweet crude versus the S&P 500. However, the market has convinced itself that correlation is there, and I can't argue with it at the present time. I'll leave the first word and giggles. You probably know what that first word is. Rhymes with hits, and maybe might start with the first letter of my first name. Might, but for the hits and giggles out here, I just simply went ahead and put a 1-minute chart. That's at the top of my screen of the ES Mini, and a 1-minute chart for light sweet crude at the bottom of my screen. And here we can take this back as far as certainly just take it back over the last several days. Let me do that first here, and then we'll go ahead and we'll add these tools to the screen. So give me a moment. Let me turn that off, and I'm just going to turn off the horizontal levels of support and resistance with our market profiles. I'll go ahead and scrunch. Each of you by now know that scrunch is a very important technical term that us chartists like to use out here. And you can see, take a look at when, spike highs are being made inside of light sweet crude. Same thing in the ES Mini. Come down here, take a look at bottoms, the same, really forming with, almost at the same time, sometimes just simply within a minute or two of each other out here, both in the way of highs and lows. So it's really a directional. It's not a tick for tick type of a pattern that is out here. I have found periods of time where the correlation, doesn't exist. But for the most part, look at how good that it is. So right now, if you're long the markets, you truly are also playing light sweet crude here in the ES Mini from about 5 in the morning this morning, right here through about 6:45. You saw just a sideways move. And we basically saw the same thing inside of light sweet crude as well. Goes ahead and takes off. When I say take off, starts to move to the upside, both light sweet crude as well as the ES Mini right around 6:55, right around 7 o'clock in the morning. Here's a period of time where the correlation, the Texas two-step, was off just for a short period of time, and that would be from about 12:57, where we saw the ES Mini move higher, but we didn't see the same correlation take place inside of light sweet crude. Lasted for about 23 minutes. Now we've actually seen light sweet crude start to move higher and the ES Mini back off. So it looks like maybe, they're just simply going to change partners, so to speak. I don't even know what that means out here, but the correlation is so tight that, a self-fulfilling prophecy out here that we must say that the Jed Clampett pattern is absolutely in play, and we'll continue to watch this and see if that correlation stays out there, and for what period of time. Now, if we go to the daily chart, right, we were just taking a look at some other charts inside the futures contracts here to try to anticipate whether the market is or is not breaking out. And if we take a look at light sweet crude right now, down 38 cents off 29 bucks, we can see that today it's got a nice little doji candle so far, right? The open of the session priced at probably 29.06, but let me see exactly. Open at 29.08. We're 29.07 right now. You don't get any better than that with regard to doji. Now, does a doji here mean anything? Nah, not really. Actually, dojis, as prices move higher, I think dojis only really mean anything at resistance. And that's been my experience in following those signals out here. Now, I can find resistance, though, on a daily chart. So we'll pay attention to it. And resistance is what? Resistance happens to be the bottom of our market profile out here. So the bottom of our market profile on a daily basis, $29.26. So if we're going to use the Stevie methodology of what the Sam heck does a doji mean out here, well, then this means that the move higher has gotten a bit tired. That also means that resistance being the bottom of the box is a very critical level. So if, in fact, we can see light sweet crude close above 29.26, pretty darn good chance that what we're going to see is price move up to 32.04, that point of control. Now, if we take a look at that daily box out here, really an equal distribution. No telling what's going to happen at 32.04, and that's assuming that light sweet crude can get above 29.26. But if the markets are going to move higher, if the markets are really going to break out and move back up to their previous swing points, or perhaps even higher than that, then it looks like the Beverly Hillbillies have got to get going out here. It looks like Jed Clampett needs to get in the backyard and shoot his gun. What was it? I don't remember. Was it a bustling spring? Probably not bustling, but I'd have to go back. You don't want to hear me sing the Beverly Hillbillies. Although I would bet in a group we could get together, maybe a couple of beers, maybe a shot of tequila, and we could all in harmony, some kind of harmony, start all singing the Beverly Hillbillies title song, their opening song out there. In any event, the song here is going to be 29.26, 32.04, and then 34.82 as the levels to be following. So that is on light sweet crude. That is really on our markets out here. My day is basically done then. So see you later, alligator. No, just kidding. Let's go. What else do we want to take a look at? We took a look at metals. We took a look at light sweet crude. We took a look at the markets out here. Just trying to think. Let's go take a look at this. Here, we haven't looked at this today. Let's go look at our advanced decline oscillators. What are their messages out here? Hey, New York Stock Exchange. Boom. Up to the moon out here. It is above zero, says that bulls have control of the ball. If we take a look at the NASDAQ composite, it was above zero on Friday. That says that the bulls have the ball. That says that prices head back to the swing point from back on February 1st, maybe higher. The Dow, we have the same message here as well. Second day, above zero, no reason for it to not move higher. The S&P 500, its messages that it's also moving higher. You've got the VIX index, that's pulling back to 2213. I hope that you're not long one of those volatility ETNs, especially. Those guys are just mere crooks. But I'm just saying. But if you are long one of those volatility indexes out here, the message is that the VIX index is going to fall to the 2164 level. It's at 2413, and you get below 2164. Markets will be cruising higher. And that means that Jed Clampett will probably have sprung another well. Now, probably will have shut down a well, right? Less supply, higher price. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, back, folks. Man, we have several emails here asking me if I could tell you about the story about a man named Jed. You know, the guy who was a poor mountaineer, barely kept his family fed. And then one day he was shooting at some crude, and up from the ground came a bubbling crude oil, that is. Black Gold Texas tea. Let's go take a look at some other emails that came in, though. There was really only one that was saying, hey, could I tell you that story? But there is an email here that says, hey, Mr. Perseverance. Hey, I got to like that. ADSK is the ticker symbol that individual wants us to look at. He's interested in playing this for a bounce, 5 to 10%. $50 is his target range. So let's go take a look at Autodesk out here. Right now, trading out at 45.06. So if we take a look at Autodesk, let's try to figure out what it's communicating to us. So we're going to come back here. Let's first turn off our profiles and go take a look at a little swing point analysis. By swing point analysis, we're going to figure out what Autodesk was doing as was coming down to test its swing point lows out here. Now, the swing point low was back on the trading day of October 2nd, 2015. That's what we're looking at. 4.4 million shares there. And when price got down to tested 3.2 million shares. So you have a successful test of a swing point low, 100% move on light volume. What we don't have here is any kind of sign of strength off of the bottom, so that oftentimes makes it a little bit risky. But that's okay. This could be a fairly risky fellow here that wants to go ahead and take this trade. We can see that price has at least cleared the swing point, and it did that on Friday. By clearing it, meaning closed at about 44.04. All right. So the very first target, forget about profiles, we take a look at those. The very first target that you want to look at on any trade is going to be what? The 100% move, going to be the swing point. Because from that swing point, we're going to go ahead and do some analysis of retracement levels, with the fourth retracement level being that 100% move. So in this case here, where this gent wants to take a look at this swing point out here for the trading session of February 3rd, that high is going to be $50.90. So I would have to say right on with you with regard to using that as your target. Now, as price gets up to the low of that swing point, which is 47.47, only really $2 from where we're trading right now, $2 and change, you want to see volume coming in there with 6.8 million shares, because that's your swing point. And if you're coming in there with less than that kind of volume, maybe it doesn't have enough energy to make it up to the top out here. So let's take a look at one other element. Let's go put our horizontal levels, our hidden horizontal levels of support and resistance. And we can see at this stage here, Autodesk, ADSK, this morning or sometime today, went ahead and hit the resistance of the bottom of that box at 45.90. So, yes, you've got a test of that swing point on light volume, but no, you don't have any kind of sign of strength that says you ought to take a long trade. The actual trade on this would have been at that 42.06 level, would have really been on the trading session of February 9th or perhaps on February 11th out here. You could have maybe even caught that at the open, I would say, on Friday, because you had two tests of a swing point on lighter volume. But even then, your target would only have been 45.90, because until price gets above that, you don't really know. I would say if you get above 45.90, then you could see price get up maybe 48.05, 48.91. So, that's what I'm seeing in the cards right now when we take a look at ticker symbol ADSK. That is Autodesk. Let's go take a look at. Oh, let's go look at the XLF. Let's go see, because on Friday, oh my goodness, you talk about signals out here. We began the show by taking a look at island tops, right? It was in Rand Gold Resource where we saw that island top. And I don't know who, but I'm pretty sure. Now, look, I'm the guy that was really quite bullish on gold, the mining equities. I mean, the proof was in the pudding. And I really thought about taking a short position in gold in this morning's newsletter. Really, I had, and I laid out a couple of reasons why. We haven't discussed those yet on the show, but I haven't just gone to, and yes, neutral until we get to, what did I say, 11.98 out there. We're trading at 12.05, so it's another, $7 maybe, but getting really close to just super bearish at gold metal from a trade standpoint here, and for a period of time. To what extent, I can't really say. But if we do take a look at the XLF, it's almost just the opposite. You had a huge island bottom reversal inside of the XLF, another sector here that has been battered down, has it not? And take a look at that candle session here, February 11th, Friday. We have a nice gap up. You got a nice old island bottom out here. And what we're seeing inside the XLF, just like we took a look at inside of Autodesk, what XLF has actually done today is it has, or it's trading above the bottom of its TAS market profile box, $20.84. What does that say? You close above 20.84, you're only at 20.86. So, let's take it with a grain of salt out here, but a really good grain. One of your, let's call it, we don't want to use the word smoke salt, although smoke salt is pretty good. We'll call it, I don't know, who makes big grains of salt out there? I don't know. I should know, because I grew up in Detroit, and they got all kinds of big salt mines up there. But we're going to skip that and say the big grain of salt is if, in fact, price can get above 20.97. But it does look like, to me, you've got all the signs of a bottom inside of the XLF. And that says that we're likely to see it move up to $21.61. Again, right now, trading out at $20.85 out there. What should we take a look at out here? Somebody says, take a look at this email. Could I take a look at Apple? I absolutely can take a look at Apple. It's trading up $2.19. Just asked me to take a look at it, but doesn't tell me what they want to do. Let's go take a look at Apple. Let me turn off these volume profiles for the moment and take a look at what Apple is doing. So we were taking a look at our horizontal levels of support and resistance by just simply looking at our market profiles out here. And that says the $96.47 area is a key level of resistance for Apple. If, in fact, it gets above that, it will have cleared the traffic pattern that was in its way from, and it'll actually be able to put its pedal to the metal, so to speak, and that says that Apple ought to move to 104. So you're trading at 95, and what is the trade right now? 96.16. And get above 96.47, you're on your way to about the $104 level out there, which is actually above the prior swing points out here. But we will go ahead and use that as the target inside ticker symbol AAPL. What else can we look at inside the market? Big movements inside the currencies. Pretty amazing here that the market is up 190, the Dow up 193, and the Euro Japanese yen just simply tanking. But, it looks to me like the new currency truly is, and we just got to really track it and pay attention to it. The new currency is probably, the carry trade is more light sweet crude than it is the Euro-Japanese yen. But the Euro-Japanese yen does have some pretty good support. Looks like it's going to test it again down in that 126.09 type level. But this certainly is moving to the downside. We're seeing huge movement to the upside inside of the U.S. dollar index. When I say huge movement, it's up almost a buck right now. It's up 96 cents, trading out at 96.50 out here. Some might say, hey, with the U.S. dollar index, that's why gold is pulling back so much. Now, there's a whole lot of other people that maybe that is the case, but I can tell you there's a whole lot of other folks that are believing that metals are going to move to the downside out here. Somebody asking me whether or not McDonald's, Mickey D's, is a short. I do not know, but let's go find out when we get back from this break. Ticker symbol is MCD. Steve Rhodes with TFNN. Dow's up 194, S&P's up 27. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We've got the Dow up 203, S&P is up 28. Before we went to that break, the question was, is a McDonald's a short, or what do I think about McDonald's? So let's just step back and start with and I understand the question for sure. Let me actually get the larger A to B equals CD pattern out here. Now, the reason why that question makes a lot of sense, I would say, if we take a look at the monthly chart out here, what we see out here is that in this current month, we can see that last month's high and last month's low has been exceeded. And that we have a candle that is trading in the opposite direction of the trend, and that trend was to the upside. So what you have on a monthly basis, you have a key reversal session inside of McDonald's. The last time we saw a key reversal session on a monthly basis inside McDonald's was back in December of 2010. That led to the following month being a down move before it continued moving higher. On a monthly basis, it is not a Japanese candlestick charting, but you do want to pay attention to the Western signal, certainly, which is what a key reversal session is. So let's see if there is a completed A to B equals CD pattern on a monthly chart up here, and there is. So I can understand the thought process. Let's go take a look at the weekly chart. Now, on the weekly chart, let's go see volume-wise. You can see really big old bear sash candle, key reversal from a weekly standpoint. But we haven't seen any follow-through to the downside. So the weekly chart is the kind that makes you say, something to think about. Because what you like to see when you have any kind of bearish reversal signal, key reversal or otherwise, or bullish reversal signal, key reversal otherwise, you sure like to see some follow-through, right? And in this case here, McDonald's has not had any follow-through to the downside. If we go turn on our profiles, we can see from a weekly chart perspective, that would be, and I'll just go ahead and leave the daily and the weekly on my screen out here. What price did is price came right down to support and found support at its TAS weekly profile, bottom of its box, 112.79. So that becomes the line of demarcation. Price here inside of McDonald's is about to get up to the weekly top of its box. So 119.17 is its number. I would wait until you get to 119.17 to go ahead and maybe take the trade. My belief is that the market has found a bottom and that the market is going to move much higher. So the stock market is going to move much higher. Gold and silver are going to get croaked. They're going to move to the downside probably faster than they move to the upside. That will probably really make people not want to buy it at all. That's at the point in time when we'll want to step back in again, right? We don't want everybody. We want to keep this a secret to ourselves, don't we? Right, we don't want everybody in on this trade. Only those folks here at TFNN. So in the case of McDonald's, I have a. Now, look, this doesn't mean I'm right. I mean, it absolutely does not mean I'm right here. I think I'm right. I believe I'm right. I have got the conviction behind what it is that I said. I think more likely than not, that key reversal session is going to get tested, and that's the high. And so the real short on McDonald's, if that's the way you want to go, is probably right around the 122.41 to 124.83 level out here. But we'll know in a day or so probably at that 119.77-ish type of level out here, and that is in McDonald's. It's got some really strong support down here at that gap up from October 22nd. So, my friends, the day is about to come to an end. Well, it's about to come to an end for me, but you, on the other hand, you get the entertainment of our man David White, our polar bear inside of this Tiger's Den. And then after David, you've got the Tom O'Brien Show from 3 to 5, and then Andy Heck to bring it on home. So have yourself a terrific Tuesday. Thanks so much for joining us, and I will see you soon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.